Have you ever stopped to think about how the pursuit of quick profit can destroy entire fortunes overnight? Most people believe that financial success is within everyone's reach, as long as they have the courage to invest in the right business. But what if I told you that this mindset, fueled by extraordinary promises, has led empires to bankruptcy? The Mississippi Bubble, one of the largest financial catastrophes in history, was exactly that, a phenomenon driven by curiosity and greed that ended in ruin. And the worst part, we are closer to making this mistake than we realize. Do you want to understand how this can affect your future? The creation of the Mississippi Company and its tempting promises. The Mississippi Bubble began with a bold idea from John Law, a Scottish economist who gained the trust of the French government during a time of great financial difficulties. France was drowning in debt after long wars, and Law appeared with an extraordinary proposal to create an innovative solution that would resolve the country's economic problems. He founded the Mississippi Company, promising to explore the vast riches of the French colony in Louisiana, located along the mysterious Mississippi River. This proposal sparked the curiosity of the French, who saw the company as a unique opportunity to get rich quickly. The combination of territorial exploration and profit expectations created a collective enthusiasm, especially among those who knew little about the true nature of these distant and almost unexplored lands. With the Mississippi Company, Law offered something extraordinary for the time: the chance to invest in a new colony rich in natural resources, precious metals, and agricultural potential. The idea that this company could transform France into an economic powerhouse driven by gold and silver was irresistible. Many believed this was a historic opportunity, something never before seen, that would make the nation prosper. The prospects of imminent wealth attracted not only the nobility, but also ordinary people, creating a growing demand for company shares. The atmosphere of speculation began to form almost organically, growing by the day, with an optimism that seemed contagious. John Law's role in this process was influential and clever. He knew that France needed an innovative financial solution and saw the Mississippi Company as a way to introduce paper money as an integral part of the economy. By creating the Banque Générale, a bank that issued notes convertible into gold, Law facilitated the purchase of company shares, further encouraging the public to invest. This created a new phenomenon. The expansion of credit fueled the purchase of assets, and the value of shares skyrocketed rapidly and impressively. The promises were grand, and investors believed they were facing something extraordinary. The atmosphere of optimism grew as the shares increased in value, and no one seemed to question whether something was amiss. The speculation surrounding the shares of the Mississippi Company quickly spread throughout France. With promises of astronomical profits, the public invested more and more, causing the share price to soar almost unbelievable. People began to sell properties and other assets to buy more shares, believing they were in the midst of a historic opportunity. It was the kind of phenomenon that captivated everyone's imagination, from wealthy aristocrats to common citizens. The eagerness to participate in this extraordinary economic event seemed to dominate the country, and anyone with any capital wanted to be part of this adventure. This investment frenzy brought about a new era of speculation, with the streets of Paris becoming crowded with stock trades. The atmosphere was chaotic and filled with mystery, as investors gathered in cafes and squares to discuss rising prices and opportunities emerging by the minute. Law fueled this euphoria by launching new shares and expanding the company's reach. However, few questioned whether the promises made were realistic. The nature of the American colonies was unknown to most investors, but that did not prevent many from betting everything they had, convinced they were on the brink of a historic and transformative discovery. What many did not realize was that the extraordinary success of the company was being sustained by a financial bubble, inflated by rampant speculation. The wealth promised by the Mississippi Company was, for the most part, illusory. Few understood the true nature of the American territories, which, instead of being filled with gold and silver, were areas with few immediate resources for exploration. However, as the shares continued to rise, optimism clouded reality. More and more, the value of the shares drifted away from the company's real value, creating a speculative bubble that would inevitably burst. Gradually, warning signs began to appear. The French economy, already weakened, could no longer sustain the growth rate that law had promised. People began to realize that the extraordinary profits they expected were not materializing, and confidence in the company began to wane. What had been an investment frenzy started to turn into panic. People began to sell their shares, generating a sharp decline in prices. What was once a promise of wealth and prosperity turned into a financial collapse that shook not only France, but the entire European financial system. The rapid rise in share value of the Mississippi Company. The value of the shares of the Mississippi Company soared extraordinarily, fueled by a wave of speculation that swept through France. Initially, the shares were offered at an affordable price, around 500 livres per share, which sparked the curiosity of investors from all social classes. As the promise of exploring the mysterious riches of the Mississippi River gained momentum, the value of those shares began to rise rapidly. The extraordinary appeal of the company was not only in its ability to generate profits, but also in the belief that it would become the definitive solution to France's economic problems. Everyone wanted to be part of this phenomenon, believing this was a unique chance to profit from something innovative. As more people bought shares, the price increased, creating a cycle of continuous appreciation. It was a true domino effect. The rising price attracted new investors who bought more shares, which in turn further increased the value of the stocks. This speculative dynamic fed collective optimism, leading many to believe that share prices would continue to rise indefinitely. Among the nobility, merchants, and even common folk, the sentiment was that now was the time to invest before prices became unattainable. This extraordinary phenomenon caused a kind of financial hysteria, where everyone wanted to be part of the company's ascent. Investing in the Mississippi Company became almost a symbol of status and financial intelligence at the time. It was common to see people selling properties, lands, and other valuable assets to buy more shares. What seemed extraordinary was that the higher the prices climbed, the more confident investors became that this was just the beginning. There was an atmosphere of unrestrained optimism, with cafes and salons filled with discussions about the incredible profits the shares could generate. The nature of this speculation echoed other historical phenomena of financial bubbles, such as the one that occurred in England with the South Sea Company during the same period, which only added to the fascination surrounding this French bubble. The unchecked rise in prices created a new financial dynamic in France. The speculation surrounding the company's shares reached a point where many merchants and artisans, who had never invested before, began to venture into the market. This expansion of the stock market was seen as something innovative, a true historical milestone. However, with such high demand for shares, the price skyrocketed to unimaginable levels. In just a few months, shares surged from 500 to 10,000 livres, an extraordinary increase that defied any logical explanation. It was as if the entire country was convinced that the success of the Mississippi Company was inevitable. However, behind this phenomenon, there were warning signs that many ignored. Few people truly knew what was happening in the American colonies, and the wealth promised by the Mississippi River remained a mystery. As the share prices rose, few questioned whether the company's fundamentals were genuinely sound. What sustained the share prices was not the economic reality of the colony, but the collective belief that this would be a historic opportunity. Just like in other financial bubbles, the company's success was anchored in inflated expectations rather than concrete achievements. Yet, in the moment's euphoria, those concerns seemed irrelevant. The growing demand for shares created a curious phenomenon. John Law's Banque Generale began issuing more and more paper money to sustain this expansion. The idea was to allow more people to buy shares, which would further increase the price. However, this unchecked issuance of money had its consequences. While many believed they were investing in something extraordinary, the truth was that the French economy was becoming increasingly dependent on an artificially inflated financial bubble. This excess of unbacked paper money eventually created a dangerous effect that would soon reflect in the collapse that followed. As the value of the shares climbed, so did the expectation of extraordinary profits. But reality began to drift away from the promises. The colony in Mississippi did not have the fabulous riches that many had expected, and trade with the New World was slow and inefficient. The expectations for a quick financial return were not materializing. But as long as the share prices continued to rise, few questioned the sustainability of the company. The speculative bubble was already at its peak, but blind confidence in future profits still kept the machine running, temporarily postponing the inevitable collapse. John Law's role in creating the speculative bubble. John Law was the mastermind behind the extraordinary rise of the Mississippi Company, and his influence over the French financial landscape was nothing short of historic. With an innovative vision and boundless ambition, Law introduced concepts that seemed revolutionary for the time, such as the use of paper money to stimulate the economy. His charisma and intelligence made him an extremely influential figure at the French court, especially after gaining the trust of the Duke of Orleans, who ruled as regent. Law believed that the introduction of paper money and the creation of a monopolistic company like the Mississippi Company could transform France, pulling the country out of its financial crisis and leading it into a new era of prosperity. However, this belief fueled one of the greatest speculative phenomena ever seen. With the establishment of the Banque Generale, Law began issuing notes that were no longer directly backed by gold and silver, but rather by confidence in the future success of the Mississippi Company. This extraordinary innovation brought a new dynamism to the French economy, allowing more people to invest in the company. For many, Law seemed like a genius, capable of turning simple paper money into real wealth. But in reality, he was laying the groundwork for an unprecedented speculative bubble. As more and more notes were issued and used to buy shares of the company, the price of those shares skyrocketed, generating a sense of prosperity that was, in truth, unsustainable. Law's role as a visionary was undoubtedly influential. He was able to see the extraordinary potential of modern finance, but he also underestimated the dangers of an artificially inflated economy. By aggressively expanding credit, he encouraged mass speculation. People, attracted by promises of incredible wealth, sold everything they had to invest in the company. The speculative phenomenon only grew, fueled by unchecked optimism. In his mind, Law believed that the value of the shares of the Mississippi Company would continue to rise indefinitely, as this would instill confidence in the financial system and solidify his economic revolution. However, the control that Law exerted over the economy was extraordinarily fragile. By concentrating so much financial power in his hands, as the central bank's controller, issuer of paper money, and manager of the company, he placed himself in a position of great responsibility, but also tremendous vulnerability. Investors' expectations were being inflated to unrealistic levels, and the lack of control over the issuance of notes began to generate inflation. What seemed like an innovative solution to France's economic problems was, in fact, creating a house of cards. Once the value of the company's shares no longer corresponded to its true economic performance, the speculative bubble was poised to burst. As the prices of the shares continued to rise, Law kept encouraging investors, feeding the phenomenon of mass speculation. He believed that over time, the growth of the colony in Mississippi and international trade would bring the wealth necessary to sustain the appreciation of the shares. The problem was that the French colonies in North America were not as rich or productive as Law imagined. Additionally, the costs of developing the region were exorbitant, and the flow of wealth from the colonies took time to arrive. Meanwhile, investors in Paris kept buying shares, driven by the illusion of quick profits. The economic reality simply could not keep pace with expectations. When the first doubts about the sustainability of the Mississippi Company began to emerge, John Law found himself in a delicate position. He attempted various financial maneuvers to maintain investor confidence and prevent the share price from falling, such as limiting the amount of paper money in circulation or buying shares of the company itself to stabilize the market. However, these attempts were merely temporary fixes. What he had created was something much larger than he could control, a phenomenon that now had a life of its own. The bubble was ready to burst, and when it did, the consequences were devastating not only for investors, but for the entire French economy. The speculative frenzy and its impact on French society. The frenzy surrounding the shares of the Mississippi Company hit France like an extraordinary phenomenon, transforming not just the financial market, but the very structure of society. Suddenly, everyone, from the nobility to merchants and even common citizens, wanted to invest, believing they were facing a historic opportunity. Rumors about the supposed riches of the Mississippi, combined with the meteoric rise in share value, created a genuine speculative fever. The streets of Paris, especially in areas close to the company's headquarters, became filled with crowds of investors. It was possible to see men and women selling properties, jewelry, and even noble titles to buy more shares. The idea of getting rich quickly and easily seemed accessible to all, and speculation became the new way of life. The social and economic ascent ceased to be something limited to the aristocracy or those with inherited lands and wealth. Ordinary people, who had never had contact with the financial market, suddenly saw an extraordinary chance to transform their lives. This curious phenomenon altered the dynamics of power and influence in Paris, as merchants and artisans began mingling with the elite of society in pursuit of participation in the profits. Speculation around the company created a new class of paper millionaires, individuals who seemed to have become wealthy overnight due to the constant appreciation of shares. It was a historical shift, with money flowing in ways that no one had anticipated. Cafes and salons in Paris, where politics and philosophy had once been discussed, quickly transformed into makeshift stock exchanges. Investors gathered in these venues to trade shares, discuss prices that seemed to rise endlessly, and exchange information, often dubious, about the future of the Mississippi Company. The atmosphere was one of total euphoria, and anyone who was not investing was seen as someone missing out on an extraordinary opportunity. It was an intense social phenomenon that dominated conversations and the public imagination. The fact that most of these people had never set foot in the American colony, or even seen the Mississippi River, did not deter their optimism. The mystery surrounding the riches of the colony only fueled speculation. This period was marked by extraordinary stories of sudden ascent. Many who started with few resources suddenly found themselves with paper fortunes, buying luxury properties, carriages, and even titles of nobility. The idea that a life of riches was within everyone's reach had never been so palpable, and this frenzy infected society as a whole. However, this euphoria also brought about a curious phenomenon, a blind rush for more and more shares, without people truly knowing whether the Mississippi Company could deliver the results it promised. Economic logic gave way to hope, and few questioned the fundamentals behind such appreciation. The focus was on quick and easy profit. The impact of the speculation was so great that even the government's behavior changed. The regent, the Duke of Orleans, encouraged by John Law, saw in the Mississippi Company a way to solve France's financial problems. The state began to support the company officially, using the money it raised to pay off government debts and sustain its expenses. It was a risky bet, and this link between the state and the company only heightened public confidence in the venture's success. If the government itself was involved, people thought it was because success was guaranteed. What no one realized was that this only deepened the speculative bubble by intertwining the financial fate of a nation with that of a private company. With all this movement, changes also emerged in how wealth was distributed and viewed in society. Money flowed rapidly from one side to another, creating a perception that France was becoming an extraordinary economic power. However, this wealth was largely fictitious, based solely on the inflated value of shares. While the elites celebrated and spent their newfound money, the real economy began to show signs of strain. Inflation skyrocketed due to the unchecked issuance of paper money, and prices of basic goods rose. This created a paradoxical phenomenon. While some became wealthy overnight, others, especially workers and farmers, saw their purchasing power drastically diminish. This speculative frenzy became the engine of Parisian life. It was impossible to escape conversations about fortunes that could be made with shares of the Mississippi Company. However, what few realized was that this euphoria was built on a fragile and unsustainable foundation. The lack of real resources in the American colony and the exaggeration of wealth promises were about to shatter this illusion of prosperity. The impact this bubble had on French society was profound, but what was to come would be even more devastating. The beginning of the collapse of the Mississippi bubble. The collapse of the Mississippi bubble began subtly, almost imperceptibly, as is typical with such extraordinary phenomena. In early 1720, the first signs that something was amiss began to appear. The grand promises of riches from the Mississippi started to be questioned, as financial returns from the American colonies fell far short of expectations. Many investors, previously driven by curiosity and excitement about being part of something innovative, began to wonder where the much-talked-about wealth was. Shipments of gold and silver simply were not arriving, and the profits promised by the company were nowhere to be seen. This was the first indication that blind confidence in the company might have been a mistake. At first, few realized the gravity of the situation. The bubble had inflated so much that it seemed impossible for it to burst suddenly. However, some more cautious investors began to sell their shares, fearing that the extraordinary growth was unsustainable. These initial selling movements caused a slight drop in the value of the shares, but no one imagined that this was the start of a historic financial collapse. From that point on, the speculative phenomenon that had taken hold of France began to decelerate. The increase in the number of share sales generated a domino effect, and the shares, which once seemed to only rise, began to lose value in a gradual but steady manner. John Law, realizing that confidence was beginning to wane, tried various desperate maneuvers to prevent the collapse. He knew that the inflated value of the shares was unsustainable, and that if public confidence were shaken, the entire financial structure he had built would crumble. One of his attempts was the massive purchase of shares by the Banque Royale, in the hope of stabilizing the price and restoring investors' optimism. However, the phenomenon he had created was much larger than any intervention he could make. The extraordinary power Law wielded over the financial market was no longer enough to control the tide of selling that was beginning to grow. The shares of the Mississippi Company, which had reached the extraordinary value of 10,000 livres, began to plummet. The speculative phenomenon that had enriched so many people in an apparently magical way was now reversing. Investors who once viewed themselves as newly wealthy began to sell desperately, fearing they would lose everything they had gained. The rush to sell shares generated growing panic, and prices continued to fall. Long lines at exchange houses and the doors of the Banque Royale became common, as people tried to exchange their shares for gold or paper money before it was too late. What had been extraordinary transformed into chaos. The lack of liquidity began to spread to the French economy, and the speculative phenomenon that seemed so distant from daily life now directly affected millions. As the value of the shares plummeted, the paper money issued by Law also began to lose value. Inflation, which was already rising due to the unchecked issuance of money, soared even higher, eroding the purchasing power of the population. Those who had invested everything they had in shares, often selling properties or even personal belongings, now found themselves with nothing. It was a true financial devastation with profound social and economic consequences. The society that had embraced the speculative phenomenon with enthusiasm just months before now turned against John Law. The man who had been hailed as a financial genius and who had created an innovative solution to France's problems was now seen as responsible for a monumental crisis. The confidence in the Mississippi Company, in paper money, and even in the French government was destroyed. The extraordinary optimism that had dominated Paris transformed into widespread panic. Investors demanded answers, and Law, unable to control the situation, was forced to flee France in disgrace. The collapse he had created shook not only the financial system, but also the very confidence in the future of the French economy. The devastating consequences for the French economy. The collapse of the Mississippi bubble brought devastating consequences for the French economy, impacting all levels of society in extraordinary ways. The speculative phenomenon that had inflated the value of the shares left a trail of financial destruction when it finally burst. Families that had seen themselves enriched just months earlier were now completely ruined. Paper fortunes disappeared as quickly as they had been created, leading many to bankruptcy. Merchants, nobles, and common citizens who had sold properties, lands, and even their life savings to invest in the company lost everything. The shock was profound, as the optimism that had once permeated the country gave way to despair and distrust. The crisis hit the French banking system hard. The Banque Royale, which had issued enormous quantities of paper money to sustain speculation, collapsed. The notes issued by John Law quickly lost value, leading to rampant inflation. Money, once seen as an innovative solution to the country's economic problems, was now discarded by all. People rushed to banks to exchange their notes for gold or silver, but the coffers were empty. This lack of confidence in the currency and the banks was a crushing blow to the economy, leading to a halt in trade and production. The country, which had been swept by a wave of extraordinary optimism, now faced an unprecedented liquidity crisis. Economic ruin also brought social instability. The population, which had once viewed John Law as a visionary, now blamed him for their losses. Anger and resentment toward the government grew, as the regent, the Duke of Orleans, had also openly supported Law and his Mississippi Company. Many believed the government had profited from speculation, while the people suffered the consequences. The collapse of the bubble completely undermined trust in financial and political institutions, creating an environment of uncertainty that would last for years. The extraordinary financial disaster came to be seen as a betrayal of public trust, with lasting effects on how the French viewed the state and the market. The economic devastation also hit industries and merchants who depended on the flow of money to keep their businesses afloat. With the devaluation of paper money and the lack of gold and silver, commerce came to a standstill. Stores closed, unemployment soared, and the French economy plunged into a severe recession. Inflation drove up the prices of basic goods, directly affecting the poorest. What had started as an extraordinary phenomenon of collective enrichment transformed into a deep crisis that impacted everyone. The Mississippi bubble left France in a state of economic fragility that would affect the country for years to come. Beyond the immediate economic impact, the collapse of the bubble left deep marks on the financial psychology of the country. Trust in the stock market, in paper money, and even in the idea of speculative investments was permanently shaken. Many who had lost their fortunes never recovered, and the fear of new speculative phenomena began to dominate the public imagination. Investing in the stock market ceased to be viewed as an extraordinary opportunity, and instead became associated with enormous risks. The bitter lesson that French society took from this crisis was clear: extraordinary short-term economic success, when based on speculation and unrealistic expectations, can quickly turn into disaster. Ultimately, the collapse of the Mississippi bubble severely damaged France's reputation on the international stage. Other European countries, observing the phenomenon from afar, viewed Law's failure as a sign of economic weakness. France, which aspired to become a global financial power, found itself in a position of extreme vulnerability. This affected trade relations with other countries and reduced French influence in international finance. The bubble that had begun with extraordinary promises of wealth ultimately isolated France, making it an example of the dangers of rampant speculation. The nation that had placed so much hope in John Law's innovations now needed to rebuild its economy and its trust in the world. Hashtag John Law's flight and his fall from grace. With the imminent collapse of the Mississippi bubble, John Law, the man who had once been celebrated as an extraordinary economic genius, saw his reputation quickly disintegrate. The plummeting share prices and the subsequent financial crisis transformed him into a figure hated by French society, which viewed him as the primary culprit for the economic catastrophe. What had once been a phenomenon of speculation and collective euphoria had now become a scene of financial devastation. Law, who had been hailed as an innovative visionary, was now the scapegoat for the entire crisis. The trust he had built with the Duke of Orleans and the government evaporated, and his position of power crumbled along with the financial market. The situation worsened as panic took hold of Paris. With chaos in the streets, the public demanded answers and, above all, culprits. Law became the main target of all popular frustration. Investors, who had once treated him as a visionary leader, now accused him of fraud and of having destroyed their lives. The situation reached an unsustainable point, and pressure on the Duke of Orleans' government to take drastic measures grew. Law's extraordinary downfall was swift and violent. He, who had reached the peak of power and influence, was now cornered and without an escape route. The population was furious, and many feared that he could be lynched by the outraged crowds. In the midst of chaos, Law realized that remaining in France was impossible. Fearing for his safety and pressured by a series of threats, he fled Paris in December 1720, abandoning his dream of transforming the French economy and leaving behind a nation in collapse. His escape was almost as extraordinary as his rise. The man who had become the most powerful figure in France, controlling the central bank and the country's main company, had to flee in haste, unable to take with him the fortunes he had amassed. The image of John Law fleeing amidst the financial crisis became a striking symbol of his fall from grace. Law's fall was not just a personal loss. It symbolized the collapse of an entire extraordinary idea of financial revolution that he had proposed. For many, his flight was proof that everything he had promised was nothing more than illusions and frauds. The speculative bubble he had created was directly linked to his image, and his departure from the country made it clear that the dream of a prosperous economy based on credit and speculation had crumbled. The impact of this was devastating not only for those who had invested in the Mississippi Company, but also for the trust of the French people in economic institutions. Law had left a legacy of ruin, and his reputation was completely destroyed. After his flight, John Law lived in exile in Italy and other European countries, spending the last years of his life in relative obscurity. The man who had proposed an extraordinary transformation for France came to be seen as a charlatan who had deceived an entire nation. His attempt to innovate the financial system with paper money and speculation proved a catastrophic failure, and Law never regained the credibility he had once enjoyed at the height of his career. He died in 1729, never returning to France, and carrying with him the burden of having caused one of the greatest financial disasters in the country's history. Despite his downfall, John Law's ideas continued to influence the global economy. The use of paper money and the creation of central banks did not disappear with the Mississippi bubble. On the contrary, his extraordinary attempt to reform the financial system ended up planting the seeds for the development of modern finance. Even though his execution was disastrous, many of the principles Law advocated, such as using credit to stimulate the economy, were ultimately adopted more cautiously by other countries. However, in France, his name would forever be associated with failure and financial destruction. John Law's flight and his fall from grace. With the imminent collapse of the Mississippi bubble, John Law, the man who had once been celebrated as an extraordinary economic genius, saw his reputation quickly disintegrate. The plummeting share prices and the subsequent financial crisis transformed him into a figure hated by French society, which viewed him as the primary culprit for the economic catastrophe. What had once been a phenomenon of speculation and collective euphoria had now become a scene of financial devastation. Law, who had been hailed as an innovative visionary, was now the scapegoat for the entire crisis. The trust he had built with the Duke of Orleans and the government evaporated, and his position of power crumbled along with the financial market. The situation worsened as panic took hold of Paris. With chaos in the streets, the public demanded answers and, above all, culprits. Law became the main target of all popular frustration. Investors, who had once treated him as a visionary leader, now accused him of fraud and of having destroyed their lives. The situation reached an unsustainable point, and pressure on the Duke of Orleans' government to take drastic measures grew. Law's extraordinary downfall was swift and violent. He, who had reached the peak of power and influence, was now cornered and without an escape route. The population was furious, and many feared that he could be lynched by the outraged crowds. In the midst of chaos, Law realized that remaining in France was impossible. Fearing for his safety and pressured by a series of threats, he fled Paris in December 1720, abandoning his dream of transforming the French economy and leaving behind a nation in collapse. His escape was almost as extraordinary as his rise. The man who had become the most powerful figure in France, controlling the central bank and the country's main company, had to flee in haste, unable to take with him the fortunes he had amassed. The image of John Law fleeing amidst the financial crisis became a striking symbol of his fall from grace. Law's fall was not just a personal loss. It symbolized the collapse of an entire extraordinary idea of financial revolution that he had proposed. For many, his flight was proof that everything he had promised was nothing more than illusions and frauds. The speculative bubble he had created was directly linked to his image, and his departure from the country made it clear that the dream of a prosperous economy based on credit and speculation had crumbled. The impact of this was devastating not only for those who had invested in the Mississippi Company, but also for the trust of the French people in economic institutions. Law had left a legacy of ruin, and his reputation was completely destroyed. After his flight, John Law lived in exile in Italy and other European countries, spending the last years of his life in relative obscurity. The man who had proposed an extraordinary transformation for France came to be seen as a charlatan who had deceived an entire nation. His attempt to innovate the financial system with paper money and speculation proved a catastrophic failure, and Law never regained the credibility he had once enjoyed at the height of his career. He died in 1729, never returning to France, and carrying with him the burden of having caused one of the greatest financial disasters in the country's history. Despite his downfall, John Law's ideas continued to influence the global economy. The use of paper money and the creation of central banks did not disappear with the Mississippi bubble. On the contrary, his extraordinary attempt to reform the financial system ended up planting the seeds for the development of modern finance. Even though his execution was disastrous, many of the principles Law advocated, such as using credit to stimulate the economy, were ultimately adopted more cautiously by other countries. However, in France, his name would forever be associated with failure and financial destruction. Historical lessons from the Mississippi bubble. The Mississippi bubble left an extraordinary historical mark, offering important lessons about the dangers of rampant speculation and the consequences of an economic system based on unrealistic expectations. The collapse of the bubble demonstrated how exaggerated optimism and a lack of economic fundamentals can lead to a devastating crisis. Investors, drawn by curiosity and the appeal of quick enrichment, ignored the warning signs. The curious phenomenon was that the higher the shares rose, the more confidence grew, creating an illusion of security that ultimately deceived even the most cautious. The history of Mississippi serves as a clear reminder that markets driven by euphoria often hide deep dangers. One of the most important lessons from the Mississippi bubble is the need for prudence in investments. The mass speculation that took hold of France in the early 18th century was driven by a lack of concrete information about the true potential of the American colonies. The extraordinary increase in share prices was based more on expectations and promises than on actual results. This generated a phenomenon of collective optimism that blinded investors to reality. The lesson here is clear. Whenever the prices of an asset rise excessively and disconnect from its real value, the risk of a collapse is imminent. Today, this remains true, especially in markets like cryptocurrencies and tech startups. Another crucial point is the importance of financial regulation and control over credit. John Law, with his innovative model, encouraged the unchecked issuance of paper money without a solid basis to support this monetary expansion. The extraordinary idea that unlimited credit could sustain the indefinite growth of share values proved to be wrong. The government, which also benefited from speculation, was unable to impose limits and control the speculative phenomenon before it was too late. This lack of regulation contributed to the disaster. The lesson that emerged is the importance of robust financial systems, intelligently regulated to avoid the creation of bubbles like this. The story of the Mississippi also highlights the fragility of trust in the market. Trust is a fundamental element for the functioning of any economic system, but it is extremely volatile. In the case of the Mississippi bubble, trust in the company's success was based on exaggerated expectations and promises. When the first doubts arose and investors began to sell their shares, the panic phenomenon spread rapidly, leading to collapse. The extraordinary lesson here is that, in times of crisis, confidence can dissipate quickly, and markets can fall in a domino effect. This has happened again in more recent crises, such as the dot-com bubble in 2000 and the financial crisis of 2008. The Mississippi bubble also shows how economic crises can have profound social effects. The financial devastation that followed the collapse of the bubble created widespread distrust in the economy and French institutions. The phenomenon of speculation left many ruined and weakened the relationship between the government and the people, as many felt that the state had been complicit in the crisis. French society was marked by this crisis, and trust in finance and paper money took decades to rebuild. This is a clear lesson in how financial crises affect not only numbers and markets, but also the lives of ordinary people and the social fabric of a country. Ultimately, the Mississippi bubble is an extraordinary lesson about how financial innovation, when not well managed, can lead to disaster. John Law brought innovative ideas to France, such as the use of paper money and credit to stimulate the economy, concepts that are still essential in the modern world. However, poorly planned implementation and overconfidence in the success of these ideas created an unsustainable situation. Financial innovations are necessary for economic progress, but need to be accompanied by careful management and a solid foundation to prevent them from becoming speculative traps. The legacy of the Mississippi bubble in the modern financial system. The legacy of the Mississippi bubble extends far beyond the devastating collapse of 1720, leaving deep marks on the development of modern financial systems. Despite the disaster, the extraordinary experience lived by France helped shape a more sophisticated understanding of markets, speculation, and the use of paper money. The historical lesson that emerged from this crisis is that economic development, when driven by financial innovation, needs to be balanced with control and prudence measures. The unchecked use of credit and lack of solid guarantees created a bubble that inevitably collapsed. This phenomenon brought to light the necessity of a more regulated financial structure, something that influenced the establishment of stricter financial policies in the following centuries. One of the main legacies left by the Mississippi bubble was the evolution of paper money. Although John Law failed in his implementation, the concept of paper currency as a substitute for precious metals did not disappear. In fact, its use became central to the modern financial system, where governments and central banks issue fiat currency without backing in gold or silver. Law's extraordinary innovation, even though it led to disaster, paved the way for the development of more structured central banks and for controlling the money supply. Today, central banks play roles of regulation and economic stabilization, learning from the mistakes that led to the Mississippi Company crisis. The speculative phenomenon surrounding the Mississippi Company also served as a lasting lesson about the danger of financial bubbles. The bubble was one of the first global-scale occurrences in history, and its effects reverberated far beyond France, alerting other countries to the risks of unchecked speculation. This extraordinary episode became a classic example of how speculation can lead to a collapse of confidence and, consequently, to a systemic crisis. What happened in Mississippi echoed in other historical bubbles, such as the tulip bubble in Holland in the 17th century, the dot-com bubble at the end of the 1990s, and the housing crisis of 2008. The legacy can also be seen in how governments and financial institutions approach crises. The fall of the Mississippi Company was a clear warning about the role the government should or should not play in speculative phenomena. France, by mixing its financial interests with those of the company, made the collapse even more devastating. Today, after historical events like this bubble, many governments adopt a more cautious stance when intervening in the market, recognizing that prudent management is necessary to prevent crises from worsening. Modern central banks and financial regulators were, in a way, shaped by the lessons left by the Mississippi crisis, seeking to avoid direct government involvement in speculative phenomena. Another aspect of the bubble's legacy was the transformation of credit and lending policies. The Mississippi bubble highlighted the dangers of uncontrolled credit expansion, especially when there is no real economic foundation to support it. This extraordinary event ultimately led to the creation of stricter rules governing lending practices and the need for solid guarantees to avoid the collapse of entire systems. The financial crises that emerged after the bubble reinforced these lessons, and today, the concept of regulating credit and markets is fundamental to global financial stability. The overconfidence and unbacked credit that characterized John Law's era now serves as a cautionary tale of the dangers of such practices. Finally, the social impact of the Mississippi bubble also left a legacy in how societies deal with financial crises. The speculative phenomenon generated a massive loss of confidence in the economy, something that took years to rebuild in France. This psychological effect is one of the greatest lessons left by the crisis. The financial system depends on public trust, and once that trust is broken, the effects can be devastating and long-lasting. Today, governments and financial institutions strive to maintain public confidence through transparent policies, clear regulation, and direct communication during crises. The extraordinary Mississippi crisis was a clear example of how the loss of confidence can devastate not only the economy, but also the social fabric of a nation. Comparisons between the Mississippi bubble and other financial crises. The Mississippi bubble, with its extraordinary impact in the 18th century, serves as a classic example of speculative bubble, whose lessons resonate to this day. When compared to other major financial crises that followed, such as the South Sea bubble, the Great Depression of 1929, and the financial crisis of 2008, it becomes clear that there is a recurring pattern. Unchecked speculation, combined with unrealistic expectations, invariably leads to collapse. What began as an innovative attempt to transform the French economy through a monopolistic company and unbacked paper money transformed into one of the greatest financial failures in history. Curiously, this extraordinary phenomenon can be compared to modern events that follow the same basic logic of excessive optimism, lack of solid fundamentals, and abrupt decline. An important parallel can be drawn with the South Sea bubble, which occurred in England almost simultaneously with the Mississippi bubble. Both crises involved monopolistic companies promising extraordinary profits from colonial territories. However, reality did not match investors' inflated expectations. In both cases, the phenomenon of speculation was fueled by confidence in the continuous growth of share prices, even without a solid economic basis supporting those increases. The outcomes were similar: share collapses, financial panic, and widespread distrust in the system. These bubbles reveal the extraordinary power of speculation to transform euphoria into panic in a short period. The comparison with the 1929 crisis, which triggered the Great Depression, also reveals notable similarities. Just like the Mississippi bubble, the 1920s in the United States were marked by unchecked optimism and the belief that the stock market would rise indefinitely. The phenomenon of mass speculation spread through society, involving not just large investors but also ordinary citizens, something that had already been seen during Law's bubble. When the market finally collapsed, the effects were devastating, destroying fortunes and shaking the global economy. Both the 1720 and 1929 crises serve as historical warnings about the dangers of economic growth based on unregulated speculation. The financial crisis of 2008 offers another extraordinary example for comparison. In this case, speculation focused on the housing market and easy credit, reminiscent of John Law's strategies in the 18th century. Just like in the Mississippi bubble, easy credit led to the creation of an unsustainable system. In the case of 2008, the rampant sale of high-risk mortgages and blind confidence in the growth of the housing market created a bubble that, when it burst, triggered a global crisis. The excessive confidence in asset values, whether stocks of a monopolistic company or real estate, without a solid and realistic foundation ultimately resulted in monumental collapses. The extraordinary phenomenon of cryptocurrencies in current times can also be viewed through the lens of the Mississippi bubble. Just like the shares of the Mississippi Company, cryptocurrencies emerged as something innovative, fueled by curiosity and the desire for quick profit in a rapidly rising market. The meteoric rise in value of digital currencies like Bitcoin sparked the interest of investors worldwide, creating an environment of mass speculation. Despite promises of economic transformation, clear similarities exist with previous bubbles, as many of these assets lack a concrete and tangible basis to justify their exorbitant values. Just as in the crisis of 1720, the danger of a sudden collapse always looms over speculative markets. Ultimately, the study of the Mississippi bubble reminds us that no matter how much times and assets change, extraordinary human behaviors surrounding financial speculation continue to follow a pattern. The initial euphoria, followed by rising prices and belief in infinite growth, almost always culminates in a dramatic fall. Whether monopolistic companies in the 18th century, technology company stocks at the end of the 20th century, or cryptocurrencies in the 21st century, the common thread is always human psychology, driven by the fear of missing out and the hope of extraordinary profits, fueling bubbles until the breaking point. The comparison between the Mississippi bubble and other crises throughout history serves as a constant reminder that prudence and control are essential to prevent extraordinary success from transforming into catastrophe. Now that you know the details of the Mississippi bubble and its extraordinary lessons, the question remains, what will you do with this knowledge? Will you continue to believe in easy profit promises? Or will you start to think more strategically and informed about your investments? History is full of examples of how a lack of prudence can lead to financial ruin. What can you do today to avoid making these mistakes? If this topic sparks your curiosity and you want to keep learning about how to protect your financial future, subscribe to the channel and turn on notifications so you don't miss any new content.